Hello viewers, welcome to my channel. I am Hashim Ali Khan. Already 3 problems we have completed on computing the income from salary. In this video, 4th and 5th, 2 more problems I am going to explain you. So if you join in between, you may not be able to understand. So keep a rhythm of watching one video, then another video. Then only you can be able to get the complete command of the subject. Before starting the 4th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready and take a screenshot of the problem solutions of 4th and 5th. Then I'll explain all the points. And don't forget to keep a notebook beside you and a pen. When I give the lecture, always note down the important points, whatever I'm saying. Then only you can be able to get the complete command on the subject. Come on, problem number 4. See carefully, 4th problem. From the following particulars, compute the income from salary of Srimati Venkata Lakshmi working in a limited company for the assessment year 21-22. First of all, the assessee is a non-government employee. Now, basic salary. First of all, see the format. This is the format. Srimati Venkata Lakshmi computation of income from salary for the assessment year 21-22. First one, salary. Basic salary is given 2,54,000 directly. So I have taken 2,54,000. Then dearness allowance considered for all service benefits 1,10,000. Dearness allowance in bracket it is given considered for all service benefits, means it is entering for retirement benefit. This DA is entering for retirement benefit, that you have to remember. But while taking this in under allowances, whether DA enters or DA does not enter, always DA should be fully taken. DA is fully taxable. So dearness allowance 1,10,000. Then CCA 40,000, city compensatory allowance 40,000, fully taxable. Then house rent allowance 45,000, rent paid in Chennai city 23,000. When the assessee is paying the rent, he is eligible for exemption, HRA exemption under section 1013A. So HRA, house rent allowance, unexempted amount is taxable. So in working note. So come to working note. The assessee is paying the rent and stays at Chennai. So HRA is exempted to the list of the following 3 amounts. Already so many problems we have done. We are sure about the provisions. First one, actual HRA received. The actual HRA received is 45,000. Second, rent paid minus 10% of salary. The rent paid in Chennai is 23,000. It is given in the problem. 10% of salary. For calculating HRA exemption, salary means basic pay only. DA will be included if it enters for retirement benefit. So in our problem, DA is entering for retirement benefit. So we should take basic as well as DA. How much is the basic? 2,54,000. How much is DA? 1,10,000. Take the total 2,54,000 plus 1,10,000, 3,64,000. So 3,64,000 is the salary. So 10% of 3,64,000, 36,400. So 23,000 minus 36,400. You are getting negative minus 13,400. And last one, 50% of salary because the assessee stay in Chennai, metropolitan city. 50% of salary, 50% of 3,64,000, 1,82,000. Now, what do you observe in these 3 amounts? One amount is negative. So, in the theory explanation, I have already explained you that when one of the 3 amount is 0 or negative, no HRA exemption should be allowed. Actual HRA received is fully taxable. So here, since one of the above 3 amount is negative, so actual HRA received 45,000 is fully taxable, no exemption. So actual HRA received 45,000. Complete 45,000 I have taken here. But in examination, you have to write on how I am writing here. The same thing you have to present in examination. Then only you can get the marks. So HRA over. Next, A big car is provided for official and personal use and employer paid all the expenses. Motor car is a taxable perquisite only for specified employees. Specified employees are three: employee director, employee shareholder, or an employee whose income from salary is more than 50,000 per annum. Already these things we have discussed in the previous video. Here the employee's income is more than 50,000. In basic salary itself it is 2,654,000. So SSC is a specified employee. This employee is a specified employee. So motor car is a taxable perquisite. The motor car is provided for both official and personal use. It's a big car and all expenses are paid by the employer. So when a big car is provided, all expenses are paid by the employer for official and personal use. The value of the perquisite is 2,400 per month. These provisions already I have discussed in perquisites, motor car. So if you have not watched, go to the video. That means perquisites taxable in specified cases. That video is there. Perquisites taxable in specified cases. In that video, you can find all these points. When a car is provided for both official and personal use, big car, and all expenses are paid by the employer, the value of the perquisite is 2,400 per month. Here, motor car provided for official personal use, the SSC is a specified employee, so it is taxable perquisite. It's a big car and all expenses are paid by the employer, so the value of the perquisite is 2,400 per month into 12. 28,800 is the value of the perquisite. Car provided for official and personal use, 28,800. The complete solution depends on the provisions. If you remember the provision, then only you can proceed. Otherwise, every problem will be a difficult problem for you. Next. After car, gas, water and electricity bill paid by the employer 10,000. Gas, water, electricity bill of the employee paid by the employer. It is a monetary obligation of the employee paid by the employer. Personal obligation of the employee paid by the employer. It's a taxable perquisite for all the employees. It's a taxable perquisite for all the employees. So here gas, water, electricity bill paid by the employer 10,000, whatever is given. Here I have not written, but in examination you should write down here. Working note you should write down. Gas, electricity bill of the employee paid by the employer is a taxable perquisite for all the employees. Next, laptop given for personal use by the company 40,000. Laptop given by the employer or computer given by the employer to the employee for use. It's a tax-free perquisite. Already we have covered this in tax-free perquisite video. So any laptop or computer provided by the employer to the employee, it's a tax-free perquisite. Here in note you should write down and don't take it in perquisites. It is tax-free. Next one is employment tax paid 290 per month. Employment tax means professional tax. It is allowed as deduction under section 16(3). So last one, professional tax 290 per month into 12, 3,480. All the points given in the problem I have discussed. Now finally we can say basic salary, allowances, DA, CCA, HRA, unexempted amount, perquisites, car provided for official personal use, gas, water, electricity bill, profit in lieu of salary is not there. Then take the total of this 4,87,800. This is the gross income from salary. From this, 3 deductions are there, but 1 deduction is not available. EA reduction. If EA is there, then only there may be a possibility of EA reduction. When EA itself is not there, there is no question of EA deduction. So only standard deduction and professional tax. Standard deduction. In working note again you should write down. The standard deduction is least of the following 2 amounts. First one, the gross income from salary 4,87,800. Second one, fixed 50,000. Whichever is less. So 50,000 is less. So here standard deduction under section 16(1)(a) 50,000. Professional tax under section 16(3), 290 into 12, 3,480. Total 53,480. Deduct 4,34,320 is the income from salary. All the points I've explained for problem number 4. Now problem number 5. See carefully. Mr. Mohammed Basha is working in a limited company at New Delhi. First of all, non-government employee. Determine the income from salary for the assessment year 21-22. So here, Mr. Mohammed Basha, computation of income from salary for the assessment year 21-22. Now one by one we'll take. Basic pay at the rate of 15,000 for first 4 months and thereafter 17,800 per month. So first 4 months basic salary 15,000 per month. So 15,000 into 4, 60,000. Remaining period, total months, out of total 12 months, first 4 months 15,000. The next 8 months, remaining 8 months, the salary is 17,800. So 17,800 into 8, 1,42,400. The total basic salary is 2,02,400. This is the basic salary. Then fixed allowance DA 60% of basic. So under allowances. Under allowances DA, DNS allowance, 60% of basic. So 60% of basic salary 2,02,400, it comes to 1,21,440. DA completed. He is living in a rented house on a monthly rent of 8,000 and the same is reimbursed by the employer. A new point. Employer is not giving HRA. House rent allowance he is not giving. The employee is living in a rented house, paying the rent from his own pocket. Later on, that rent is reimbursed by the employer, repaid by the employer. It is a taxable perquisite for all employees, fully taxable. Rent is paid by the employee, but it is reimbursed by the employer. So under perquisites we should take house rent reimbursement by the employer 8,000 per month into 12, 96,000. In working note you should write on reimbursement of rent of house. It is not an allowance of house rent. It is personal obligation of employee made by the employer. Hence it is fully taxable perquisite. Next, CCA. City compensatory allowance 3,000 per month. Here CCA. 3,000 per month into 12, 36,000. Next comes club bill paid by the employer 8,300 including sports club fee 2,000. Club membership fee of the employee paid by the employer is a taxable perquisite, but for sports club fee paid by the employer, it is not taxable. Sports club fee is not taxable. So here 2,000 rupees are not taxable. Out of 8,300, 2,000 are not taxable. So 8,300 minus 2,000, 6,300 is taxable. So under perquisite. So here you can see club bill paid by the employer 8,300 minus 2,000 is 6,300. In note you can write on club bill. It is taxable per to all employees. If the employer pays sports club, it is not a perquisite. For sports club, not a perquisite. Next comes employer's contribution to RPF, recognized provident fund, 13.5% of basic pay. Now remember, first time we are coming across RPF. Employer contributes 13.5% of salary to RPF. Income Tax Act says employer's contribution to RPF is exempted up to 12% of salary. Up to 12% of salary. Here I have not written, but in examination you should write a note. Now also you write it in the notebook. Employer's contribution to RPF is exempted up to 12% of salary. If more than 12% of salary is contributed, it is taxable. Here it is more than 12%, 13.5%. So 13.5 minus 12, you will get 1.5. So 1.5% is taxable. So here you should take, under salary you should take employer's contribution to RPF in excess of 12% of salary, 1.5% of salary. Salary is 2,02,400. into 1.5. How you got 1.5? Employer contributes 13.5, whereas Income Tax Act has allowed as exemption 12. So 13.5 minus 12 is 1.5. 3036. Next point is interest credited to accumulated provident fund at the rate of 12% is 36,000. Interest credited in RPF is exempted up to the rate of 9.5%. Already all these things I have explained in the last video on provident fund. So if the interest rate is up to 9.5% exempted, if the interest is credited more than 9.5%, it is taxable. So here it is credited at 12%. 12%, more than 9.5%. How much excess? 12 minus 9.5. You will get 2.5. So 2.5% extra is credited. That is taxable. So here you can see interest credited in RPF in excess of 9.5% is taxable. So at 12% rate, at 12% rate of interest, the interest credited is 36,000 given in the problem. In the problem it is given at 12% rate, the interest credited in RPF is 36,000. But our excess rate is 2.5. 12 minus 9.5. 12 minus 9.5 is 2.5. So at 2.5%, how much is the interest? So 2.5 divided by 12 into 36,000, you will get 7,500. So 7,500 interest is taxable. So here, interest credited in RPF in excess of 9.5% rate is 7,500. That's it. This is the new point we are coming across in this problem. Next is cook is appointed by Mr. Muhammad Basha, but salary is paid by the employee, by the company, 4,500 per month and bonus 5,000 per annum. Now see, a cook is appointed by the employee himself, but the salary of the cook and bonus of the cook is paid by the company. It is a fully taxable perquisite for all employees, not only for specified, everybody, because cook is appointed by the employee himself. Cook is appointed by the employee himself. So it is fully taxable. Here you can say, where is that? Where I have written? Salary. Salary of cook paid by the employer, 4,500 per month into 12 plus 5,000. 4,500 per month into 12 plus bonus is also paid by the company to the cook, 5,000 bonus. So total 59,000 rupees fully taxable perquisite. Next one. Then other payments made by the company. Car maintenance allowance 5,000 per month, actual amount spent 80%. Car maintenance allowance, car is not provided. No car is given by the company to the employee. Employee is having his own car, but the maintenance of the car allowance is given by the company. Income Tax Act says this allowance is fully taxable. The actual amount spent should be ignored. The allowance given for car maintenance is fully taxable. So 5,000 per month into 12, 60,000. Here you can see. Car maintenance allowance, 5,000 rupees per month into 12, 60,000. Here you should write, this is fully taxable. The actual amount spent should not be considered. That is the law. That is the provision. Next one, credit card expenses, 15,000, including 3,000 for official purpose. Credit card expenses of the employee paid by the employer is fully taxable perquisite, but only for personal. If official purpose expenses are reimbursed, that is not a perquisite. Here it is given 3,000 for official, so deduct 3,000. So 15,000 minus 3,000, you can see here, credit card expenses paid by the employer, 15,000 minus 3,000, 12,000 is taxable. 12,000 is personal, 3,000 is official. Official is not taxable. Next one. Then free lunch, rupees 95 per day for 186 days. lunch provided by the employer to the employee is exempted up to rupees 50 per day. The excess will be taxable. So here 95 rupees per day paid by the employer. So 95 minus 50, 45 rupees per day is taxable. For how many days? 186 days. So in perquisites you can see free lunch provided. 45 rupees into 186 days, 8,370. Or you can write like this also. Actual amount paid 95 rupees into 186 days, 17,670. Whereas exempted amount is 50 rupees per day for 186 days, 9,300. So exempted, you deduct 8,370 is the taxable value of perquisite for free lunch provided. Paid rupees 4,600 as professional tax. This will be allowed as deduction under section 16(3). The last one. Professional tax under section 16(3), 4,600. All the points I have explained. Now briefly overall view I will show you like this. Salary. Under salary, basic. First 4 months basic salary 15,000. Remaining 8 months salary is 17,800. Total salary. Employer's contribution to RPF in excess of 12% of salary is taxable. In our problem it is given 13.5. So up to 12 exempted. Excess 1.5 is taxable. So 1.5% of salary comes to. Interest credited in RPF is exempted up to the rate of 9.5%. If more than 9.5% rate of interest is credited, then excess will be taxable. So here in our problem 12% is given. Up to 9.5% exempted. So 12 minus 9.5, 2.5 extra rate. 2.5 extra rate. So what is the amount for 2.5 extra rate? Here I have shown. At 12% it comes to 36,000. 2.5 how much? So 2.5 by 12 into 36,000, 7,500 is tax. So these are the items that will appear under salary. Now here allowances DA. DA 60% of basic given in the problem, directly I have taken. CCA fully taxable. Car maintenance allowance fully taxable. 3 allowances are there. Then perquisites, house rent reimbursement by the employer. New point. There is no house rent allowance, but house rent is paid by the employee but later on reimbursed by the employer, fully taxable perquisite. Then salary of cook. The cook is appointed by the employee but salary and bonus is paid by the employer, fully taxable. Then club fees. Club fees paid by the employer is taxable perquisite provided sports club fee will not be taxable. So deduct sports club fee. Then credit card expenses paid by the employer only for personal use is taxable. For official, not taxable. Deduct official. Then free lunch provided 45 rupees per day for 186 days. Then profit in lieu of salary is not there. So gross income from salary is 6,12,046. Gross income from salary. From this deductions, standard deduction, least of the following two. Gross income from salary is 6,12,046 or fixed amount of 50,000, whichever is least. So 50,000 is least. 50,000 you deduct. Then professional tax paid 4,600, total 54,600. Deduct 5,57,446. 5,57,446 is the income from salary. All the points I have written here. Just know what I have discussed. So this is the end of problem number 5. Totally 5 problems are completed on income from salary. Each and every problem, different and new points we are covering. So only in the first glance itself you may not be able to understand. Particularly among the 5 heads of income, this salary head of income having more and more provisions. So you must have the interest to learn. You must have the patience to listen. Then only you can be able to get the command. Otherwise, if you just casually listen this lecture, you will not get the complete command. Inshallah, we will continue the next problem in the next video.